better inflation protection, better tax benefits, better growth. I'm going to have just as good liquidity. I'm going to have, ancillary benefits like living benefits. If I get cancer, I'm going to be able to have access to that money. If the ultimate tragic happens and I die, it's going to be a self-completing plan. I say this a lot in my videos, and I'm going to say it again right now, is like, when you utilize whole life insurance as this banking alternative, it's the only financial strategy to make sure that what you want to happen will happen when you want it to happen, whether you're here to see it or not. And that's a big thing. Hey, what's going on, cash flow hackers? It is Chris and Cole with Life 180, and we are here today to talk to you about why you need a whole life insurance account instead of a bank account. And this is a really fun topic. We talk about this in a lot of different ways, shapes, and forms, in a lot of our content. But ultimately, I don't think we've done a video, Cole, just talking about the idea of like really just starting your own bank account and just leveraging purely a whole life insurance account as that banking alternative, not getting into all the details of, and I'm sure we'll go there, but not getting into all the details of how to leverage it and all these different things, but like just purely speaking, whole life insurance as kind of a savings account on steroids and all the benefits that you kind of do get with that, the inflation protection, the liquidity, the fact that it can implement a set of rules and systems for you to kind of operate inside of your life, and it forces you to kind of become a better consumer, a better saver, a better investor, a better, just a better person overall, quite frankly. And so it's one of the reasons that I love this, that I love this concept is that, we're going to do another video, and I'm going to I guess just give a little insight to it, but it's, the 4 things that poor people do that rich people don't do is going to be the title of the video, right? And the number one thing that poor people do that rich people don't do is, well, I guess it's actually the opposite, is poor people don't have a set of rules and systems in which they make their decisions through. They just kind of react emotionally and just like whatever feels good. You know what I mean? And wealthy people understand that you need to have rules and systems and, all these things in place, and having a whole life insurance policy as a foundational component that kind of plays that banking function in your life and forces you to have your decisions go through this kind of filter, so to speak, forces you to be a better consumer, forces you to show up more powerfully in your life. And it ultimately, when you do that, it forces you, what I love, because of Life 180, living intentionally for excellence, it forces you to be intentional about everything you do. And when you do that, it helps you get to a place where you, can experience more predictable results in a more consistent, predictable basis to ultimately get where you want to go faster. What say you, Cole?
Wow. I mean, who would have knew that a bank account, a banking system could make you a better person? I
genuinely believe that too. That's
right?
how much of a geek I am.
Yeah. And I mean, wow, what a rabbit hole that would be. We like, on the channel, obviously we'd like to talk critically about the benefits of using whole life insurance for various things, cash flow hacking, obviously, real estate investing, small, medium enterprise level businesses, what have you. But hey, if you could use infinite banking to hack your moral, ethical, personality, relationships, it's amazing what money does to people. I mean, if you really think about it, money is very much the root of all evil. And, relationships are won and lost often at the hands of a dollar. So imagine if you had control of that. So it's very metaphorical. That is a total rabbit hole right there that I will try and stay away from. And that's for another video. But for today, I kind of call it, what you're describing and using whole life insurance versus a traditional bank account. When you just chalk up the benefits of using whole life insurance as a banking system is a place just to store something. In this case, we're storing capital. Really, we're not storing cash, we're storing capital. There's a difference between cash and capital. It's a very, very key difference. Again, that's another video. You can look forward to that. But the key difference is what I call it the right call. The difference between using whole life insurance and using a traditional bank account for the banking function of one's life, of your life, is the right call. RIGHTCALL. Risk, insolvency, generational, hedge, tax, compounded, awesome, leverage, and liquidity. And the A is the awesome piece. Right? So R, risk, I, insolvency, G, generational, H, hedge, T, tax, call, C, compound, A, awesome, L, leverage, L, liquidity. The awesome.
I had to throw the awesome in there.
It's because that's how you'll feel. Like, that's your point.
Yeah,
right?
That's how you feel. Totally.
You will feel awesome when you actually have control of every dollar that flows in and out of your life. You know, you're using $1, 2, 3, 4, 5, sometimes 6 times, you know?
Totally.
And you feel awesome. So that's funny because I call the benefits, I'll draw it out, whiteboard it, and I'll go, okay, traditional bank account versus whole life insurance. This is the right call. And I'll spell out RIGHTCALL, and A is for awesome. You just nailed it. You feel awesome.
Well, you know what's crazy is like, dude, that's awesome. First of all. What's crazy is like so many people talk to me about this, like, because so many people are focused so much on investments, right? Like they think that the key to their success in life financially is their investment strategy.
Accumulation of a 401k value,
right?
Canadians, RRSPs. Yeah.
And they don't realize that the real key to their success has nothing to do with their investment strategy, but their savings strategy, their banking strategy, how they actually set up the foundation of their financial life at the very, very beginning of everything. Because, if you don't do that right, ultimately what you've done, it's the biblical, conversation around building the house on sand versus building it on stone. Mm-hmm. Right. And so talk to me about, how utilizing whole life insurance as that banking foundation for you really is setting yourself up, your financial, it's like building your financial life on that foundation of stone that can weather any storm, that can prepare you for opportunity, that can do all that stuff.
Yeah, I mean, when you ask, that's a super good question. When you ask that question, the first thing that comes to mind is, paying it forward a generation or 2 or 3. Using $1, not 3 times in your own life, but instantly $1 into your banking system as described instantly affects 3 generations. Yeah. And what does that look like? That when I think of the foundation of America is the family. And I think, what does this foundationally do? Well, it breaks down the fears very specifically around financial literacy, and it encourages an environment in the family of stewardship. We don't need to know why we do certain things. We just do it because often our parents did it. And if you're born into a banking system and a philosophy of banking, and it's just the norm within your family after generations, much like the ultra high net worth families of this country, European countries have done for generations, you'll find that eventually it's just the new normal. It's that stewardship, that foundation of just behavior that is paid forward one generation. Mm-hmm. This is the generation, you watching this right now. If you have a child, if you know someone that has a child, you need to think about, what it looks like, say, for that child to have a whole life insurance banking system on their life, and then what that means to the owner, which is the parent or the grandparent, and then the beneficiary. And then, that's where it goes for me. When you ask that foundational question, that's really kind of, where it goes to. And we can, and maybe you can unpack the benefits of, maybe just the owner of the banking system or the life insurance contracts, property design. What does it do for their life, and what are the living benefits versus, say, the general? Because we all get caught up in that, right? Well, like, hey, I want to work hard for me. I want to live and enjoy my money today. I mean, it's great that my kids and my heirs will have money, but what about me? What about today?
Well, it's like anything else. That's the power of the leveraging a whole life insurance policy as a banking alternative, and kind of having it play that function and role in your life is it forces you to have a system in which you like I said at the beginning, you filter your decisions through. And so like if I I buy a whole life policy, and rather than saving money into a savings account, I'm saving money into this policy. However amount of money, could be $10,000 a year, could be $5,000 a year, could be $500,000 a year. It doesn't really matter. The principle is the principle, and it scales, at almost every level. And the bottom line is, you look at the benefits with that is, I have to, if we think about like foundationally, what do we need in our lives to operate inside of a financial system? Is I'm a big believer we have to save with the mindset of saving to protect and save for opportunity, right? Like we have to have that rainy day account, that emergency fund, the old, that stuff that, we don't like to spend a lot of time talking about, but it's important to have.
Absolutely. Yeah, it is.
You have to have it there because, in times of hardship, in times of, when you lose your job, if you, like the economy fails and you have a window, of your life where, you want to make sure that you're not having to make desperate decisions, because that's where people who feel like they have it all figured out and are doing well, when the wheels come off and when, their seemingly financially secure life turns upside down and becomes very insecure. It's because of decisions that have to be made because of bad financial structure, quite frankly.
That's right.
And that's the reality. So having, rules for yourself that you put into play and principles that you put into play, and using like a whole life policy as a forced savings plan, and then being able to leverage a portion of that as an emergency fund, being able to leverage that as an opportunity fund. And also it's a self-completing plan, because, like that's, and to me, that's one of the most powerful parts about it. I'm married. Been with my wife for, married for 15 years. I got 3 kids, and, I've got a 10-year-old, a 7-year-old, and a 3-year-old. And, I don't know about you, but for me as a husband, and a father, I have objectives and a life and a responsibility. And, what I believe I have a vision of what I want to be able to create for my family. And I feel like I have a biblical responsibility, to be able to give more opportunity to the next generation, and to be able to create systems so they can be more successful and pay it forward and pass it forward and so on and so forth. And so from a self-completing plan perspective, like if I'm using a bank account to save my emergency fund, to save for an opportunity fund, and to be prepared, and using that as my foundation, well, I'm always at risk of making it so my family is going to have to take a step backwards if anything happens to me, because the key to the success in everything is me, right? Is my ability to produce and perform and contribute and save and take active income and turn it into something, right? And so if I get into a car accident and die, through a 10-year plan where I'm building this whole foundation up, and then something happens to me year 4, well, guess what? Nothing that I have for a vision is actualized for my family. But if I do it through a whole life policy, I'm going to have better inflation protection, better tax benefits, better growth. I'm going to have just as good liquidity. I'm going to have, ancillary benefits like living benefits. If I get cancer, I'm going to be able to have access to that money. If the ultimate tragic happens and I die, it's going to be a self-completing plan. I say this a lot in my videos, and I'm going to say it again right now, is like when you utilize whole life insurance as this banking alternative, it's the only financial strategy to make sure that what you want to happen will happen when you want it to happen, whether you're here to see it or not. And that's a big thing. But
there's one dirty little secret before I just throw to Chris for him to wrap this whole thing up. Is that as a licensed financial advisor, which I still am today, Chris isn't, so he can say this. So as a licensed, I can't tell you that at the end of the day, after something called an offset year, and this is kind of industry jargon, but there's this thing called an offset year, is that every year after the offset year, the life insurance contract is giving you back more than you're actually putting into it. But yet you still have this whole death benefit piece that really isn't a draw on your premium dollars anymore. Totally. If I could say it was free life insurance, which I can't say that, but if I could say it was free life insurance, I would, but I can't. So if you really think of it mathematically, though, to Chris's point,
it's the biggest no-brainer. When you look at what I would suggest everybody to do is just look at build a T-chart of the positives and negatives, and look at the benefits of a bank account, the benefits of a whole life policy, and when you look at it, and you understand what we're talking about, it becomes the biggest no-brainer in the world. If this is why I believe so emphatically in what we do, in utilizing whole life, and I'll wrap it up with this, as a savings alternative, is because of the fact that I emphatically believe that every single person in this world needs at least a year, a minimum, a year of income in a safe, liquid, accessible account in case of emergency, right? Now, I would argue that you need multiple years more in case for an opportunity fund. But let's just say the bare minimum. I don't know a person alive that would argue with me when you really look at the numbers and the metrics and the why behind this, that you need a year. 6 months doesn't do crap for you. You need a year. And so if that's the case, the question is, and you know you need a year of safe money, my question to you is, where are you putting that money? And if you're putting it anywhere outside of a whole life policy, I'm going to tell you it's inefficient. And when you look at the two options between a bank account, like a savings account, and a whole life policy, and what your role is as a father, a wife, a husband, a parent, like whatever, like your responsibility to help make sure that what you want to happen will happen when you want it to happen on a guaranteed basis, there's nothing else in the world that will compete with this. So, if you're an agent, you need to be conveying that to your clients. If you're somebody who's looking at this for yourself, you need to be like really taking a look at whatever you're doing in your life to execute this in your personal financial world, because missing the boat on this it's like having a sinkhole potentially in your financial life, and it may feel good right now, but it can implode before you know it. So that's that. So I guess not the bubbliest of videos, but hopefully valuable, and you found value in it. If you did, please smash that like button. That way the YouTube algorithm gets it out there to more people. I think like people understanding this concept is super, super vital. So if you haven't already, hit that subscribe button, click the bell. That way you get notified every single time we launch a new video. At the end of this, also check out the playlists that we have here going for you. Keep the educational journey going. I'm telling you, like, this is super vital stuff. And yeah, that's it. We're going to keep it clear. If you want to talk with somebody, get on the phone with somebody, have a conversation, figure out what this can do in your life, figure out how we can help you in your practice. If you are a licensed agent, reach out in the description below. There are links. Feel free to reach out to anybody. You'll get on the phone with somebody on the Life 180 team here, and we will be able to help you out. And that's it, man. Until next video. Hope you have a blessed, inspirational day. We'll talk to you guys soon.